Welcome back to the deep dive. Today, we're looking into a bit of a head scratcher, HIMS and Hers Health Inc., ticker HIMS. The stock took a massive hit recently, but then this analysis from Stock Telescope dated June 24th, 2025, calls it a cautious buy at reset valuation. So our mission today is really to unpack that investment thesis. What's going on with this direct consumer telehealth leader?
Absolutely. And just before we jump right in, it's really important we state this clearly. This conversation, it's based on that stock telescope analysis, and it's purely for informational, educational purposes. Definitely not investment advice. Please, always do your own homework. Consult with licensed financial advisors. It's crucial.
Right, absolutely crucial. So that 34% drop, wow, that really felt like a gut punch for HIMS investors, didn't it? It came right after Novo Nordisk pulled the plug on a partnership only a month old. But Stock Telescope says the market reaction was disproportionate. Why? I mean, what did the market miss there?
Yeah, it's fascinating, isn't it? The reaction really does seem, well, overblown when you look closer. Sure, the partnership had offered some validation, maybe some upside potential. But HIMS, they were already projecting $725 million in 2025 revenue just from weight loss. And that was mostly from compounded alternatives, those custom mixed meds, not really banking on the Novo deal specifically.
Okay, compounded alternatives. So losing that one deal wasn't like the end of their whole weight loss plan.
Exactly. It wasn't the linchpin the market maybe thought it was.
All right, so if the Novo news was maybe more smoke than fire for the long term, what about the actual business? What are the fundamentals telling us, before all this short-term noise hit?
Well, the fundamentals look pretty strong, actually. Their Q1 2025 results, they were exceptional. Really showed underlying strength. Revenue shot up 111% year over year. That's $586 million.
Whoa, 111%.
Yeah, huge growth. And their adjusted EBITDA, that's, a key profitability measure, it nearly tripled to $91.1 million.
Right.
Shows real operating leverage. Plus, subscribers reached 2.4 million, up 38% from the year before.
Okay.
And their guidance for the full year, 2025, is a pretty solid $2.3 to $2.4 billion in revenue.
So strong numbers, and you mentioned earlier it's not just weight loss.
Not at all. That's key here. HIMS is really a diversified telehealth platform. They're in sexual health and wellness, mental health services, dermatology, skincare, hair loss. It's broad.
Right.
They're even moving into primary care, and they just bought Zava, which gets them into Europe, Ireland, France, Germany, expanding their reach significantly.
Okay, so that breadth is interesting, but how does that actually give them an edge? Isn't it risk spreading them too thin? But the report sees it as a strength, though.
It really does seem to be a core strength, yeah. And it's backed by what we'd call competitive moats. Things like brand trust, which is massive in healthcare. Scale, obviously, with 2.4 million subscribers, creating network effects.
Okay.
They also have their own AI platform, MedMatch, helps personalize treatment.
Okay.
Plus, serious regulatory compliance infrastructure and that direct pay model. And actually, it's kind of interesting, the whole regulatory scrutiny around compounded drugs, it caused short-term jitters. Yeah. But long-term, it might actually help HIMS by, weeding out smaller players who can't keep up with compliance.
Ah, okay, so it raises the barrier to entry.
Precisely. Which brings us back to that valuation reset. That 34% stock drop, it wasn't just noise. Stock Telescope sees it as, well, a potential entry point. The EV to revenue multiple. It crunched down from a peak around 12x to just 5.3x.
Good drop.
Huge. And the PEG ratio, that's price earnings to growth. It's just 0.8x. I mean, typically anything under 1.0 for a growth company like this signals it might be, seriously undervalued compared to its growth prospects.
So potentially cheap relative to how fast it's growing?
That's the argument. And management seems confident too, right? They put out this 2030 vision.
Yeah.
$6.5 billion plus in revenue, $1.3 billion plus in adjusted EBITDA. Ambitious stuff.
Okay, ambitious targets. Sounds compelling, but let's talk risks. What does the analysis flag as the main concerns, especially with telehealth and these newer models?
Yeah, risks are definitely there. Regulatory risk is probably the big one. Potential FDA actions, maybe changes in state-by-state telemedicine rules. That's always a factor.
Right.
But HIMS seems to have pretty robust risk management. They've invested heavily in compliance. And like we said, that revenue diversification across different health categories helps cushion things.
Okay.
Plus, you have the broader industry trends just pushing things forward. Telehealth adoption is still accelerating. People are taking more control of their health care. Mental health awareness is rising. Those are powerful tailwinds.
Got it. So weighing all that, the Stock Telescope analysis wraps up with a cautious buy. They point to the market overreaction, the diversified platform, those strong financials, the competitive strengths, and they've got a 12 to 18-month price target of $55 to $70.
Which really leaves an interesting question for you, our listener, doesn't it? How do you personally weigh a company's real value when you see these big short-term market swings maybe overshadowing what looks like solid fundamental growth and smart strategic diversification? It's definitely something to think about when you watch the markets day to day.
Absolutely. And just one final reminder for everyone listening. This deep dive, it's based on that stock telescope analysis. It's strictly for your information and education. It is not investment advice. Always, always do your own research, and please consult with a licensed financial advisor for your individual needs. And hey, if you found this deep dive valuable, make sure you subscribe to the deep dive wherever you get your podcasts.